Do insider traders have access to Trump tweets before they happen? Is the 4% rule reliable? And am I lying about how I grew my net worth? Let's find out. Welcome back to the Personal Finance Club show. Hey, Jen.
Hey, Jeremy. What's going on?
So much. Do you have any money memories or money, like old habits that die hard in your life? Things that you like have been doing for a long time and you realize like, oh, it's kind of weird that I still am really sensitive about that type of spending. Do you have anything like that?
I mean, I probably have so many. I feel like you're gonna have like maybe like things that even though their old habits die hard, they could probably help you. Whereas I still have some old money habits that probably hurt me. So like even like I feel like I was broke for so long that I would be afraid to check my bank account, and I still have that fear sometimes, like opening my bank account, and I'm like, why do you have fear? You know you have money. Like, why are you still
Oh,
afraid
that's
to
an
like
interesting one.
go on
That's a good one.
bankofamerica.com? You know?
Yeah.
I don't know. Like, there's something about me that's always like, oh my God, I'm gonna get in there. It's gonna be negative. You know, like that was just like
I
always
feel like
like so broke.
that's such a common theme in personal finance, which is, just fear to look because you're worried about what you'll see, like especially with things like debt, where like, I talk to people who don't even want to look at how much debt they have because
hmm
just facing it is so scary. That's a good one.
Yeah,
Um,
even like random things. Like I got some random music money this morning, and I was like, "What is that? Don't even worry about it." It's like, yeah, you need to go find out what that is so you know like where it came from. Like, because some of it's direct deposit, and it's like, even if
yeah,
it's positive, I'm like, don't worry about it. Just it doesn't matter. It's in the account already.
yeah. It's crazy how, keeping a track of your own finances is kind of like a little job.
hmm
And it's so easy to just let it go. Even for me that like does this for kind of like a real job.
hmm
I let things go by the wayside and you're like, oh, how much money is in my bank account?
hmm
I used to like balance my checkbook. Like I would keep my own record of
Yeah.
every single dollar and I wouldn't like sync it to the online bank. And um, I did that for years and it
hmm
just became, too burdensome. Now I'm just like, kind of like you, I'm like, how much money do I have? I hope the bank is right. I
Yeah.
think that's
I
what
mean,
everyone does these days.
don't blame Alice and Wilberforce Mundia because they have immaculate money habits. Like they keep track of everything to this day. So I don't know
Wait,
where
are
this
those your
came
parents'
from.
names?
Yes.
Okay. What'd you say? Alice?
Alice and Wilberforce.
Wilberforce?
Wilberforce. Mundia.
That's all his first name?
That's his first name. Wilberforce Omusala Mundia.
Wow.
It's
I
a
don't think
very,
I've ever heard you say his name before. It's amazing.
yeah, it's a pretty he lives up to the name. He's a force
That's
to be
amazing.
reckoned with.
That's amazing. Um, I have a story. So this, I think past weekend, I bought, this is how it started. I went to
hmm
Costco. I was like, oh, I need tomatoes. I'm at Costco. Might as well. But then Costco sells you like 12 tomatoes. And I'm like, I don't really need 12. I need like two or three.
hmm
And so then I need to use more tomatoes. So I was like, okay, I'll make salsa because like that's a really good thing to do with a lot of tomatoes. And so I look up a salsa recipe and then like my heart sinks when I see this recipe because it's like, oh, you need a food processor. And like, I don't have a food processor.
Yeah.
And,
You probably
and,
get that at Costco.
well, but that's the money habit. Like that's my money mentality, which is
hmm
like I'm not a food processor kind of guy because that's
Mm.
an expensive um, appliance that I
hmm
don't have disposable income for because that's what I would tell myself for like years or decades. Like
Yeah.
you can't buy a like optional kitchen appliance. Not and it was for money reasons. There's other
Yeah.
reasons
Yeah.
not to. Like some people don't want to clutter their kitchen, which is like totally legit.
Right.
Um, and so like my heart sank. I was like, oh, what am I going to do? Like I could just cut it up by hand and have some kind of like crappy salsa. And then, sitting there for a minute, I was like, wait a minute. How much can a food processor really cost? Like this isn't like,
Yeah.
a house or
Like
something. It's
$30 or something like that, maybe.
totally on Amazon. You can have it delivered same day for $30. I'm like, this is
Yeah.
not like this is not a showstopper. I'm obviously it's like going to be $30 sauce at this point, but then you'll have
Yeah.
it for next time. And so I
Exactly.
bought a food processor, somewhat
Good
ironically,
job.
it got there like in the 5 to 10 window and I wanted to make it before then. So I just used like this little blender I had, like a little smoothie blender,
You didn't
which
even
worked
use it.
fine. And so now I might return the $30 food processor. But the point is,
hmm
I like my heart literally sunk. I was like, oh, I'll never be food processor rich. But then I'm like, wait a minute, I could
I'm like,
totally
wait.
afford a food processor.
Yeah, I
And I
think you
probably could have
can.
back then too,
Right.
but now I can. But I do think it's
Yeah,
like important to question those money mentalities we all have.
I'm the opposite of you. I'm like more of an impulse buyer, but what I've done now is I started to make lists, and if it's still in there like in a few weeks and like I've checked prices and things like that, then I'll be like, okay, it's this wasn't just like you needed this mic right now, you know,
I,
it's like,
I
yeah.
love that. I
Yeah,
have a lot of things
I'd
like
have a list of
saved in my Amazon cart.
mm-hmm.
So I mean, the food processor is a good example. It's like, do I really need this today, or could I wait a week? And a lot of those things,
Right.
you're like, if you're like a week later, you're like, no, I still want this. Like, yeah, go do it. But I do like that save it for later thing because maybe half the time you're like, oh, actually, that was like more impulse, and then you save some money by not buying it just in that moment.
Yeah, now I have a list of like gear that's just like been sitting there for years. I'm like, that's too much. You know, like now it's like kind of like, oh,
Yeah,
what, like, you know, how can you not buy that or whatever? So it's more of a game.
right.
But yeah, we're the opposite for sure in terms of healthy money habits. But I'm aware and I'm using tools to combat that.
Well, that's amazing, and that's what it's all about. Just like this little incremental growth. No one's perfect with money. Everyone makes money mistakes, and
Hmm.
if you can grow from it, then great.
I love it. All right, should we jump in?
What is our first topic?
We've got a very hot topic.
All right, what do we got?
Okay, so today's topic is from a CNBC Twitter post, although it was probably on every platform. So the caption reads, S&P 500 futures and oil futures flashed an unusual burst of activity early Monday minutes before a market-moving social media post from President Donald Trump. The timing of the volume spikes across both equities and crude caught the attention of traders, particularly given the absence of an obvious catalyst at the moment they occurred. So I saw this everywhere. I immediately thought of you, and then I was like, "Wait, is this fake news?" Because I think I saw it on Twitter first. So I was like, "Is this fake news? Is this somebody like blowing up a situation that isn't that big of a deal?" Then it's really hard to decipher in the news what's a big deal nowadays. So then when I started seeing it on Instagram, Facebook, everywhere, then I was like, "Okay, this is actually a big deal, and I can't wait to ask Jeremy about it." So what does this all mean?
Great question. And so it's important to know what we're looking at. So there's two charts they include in this article, and I think what we're most often looking at when we look at a stock chart is basically the price of something. So if you look at the Apple stock price, you see this how much a share costs. If you look at oil prices, you see how much oil costs. But there's like a secondary chart shown here, which is the volume. And
Mm-hmm.
volume means not only what is it trading at, and trading at is like the last trade that occurred, how much did you buy a barrel of oil for, or how much did you buy a share of Apple stock for? It also means how many people are trading. And so did like 3 people buy a share, trade a share of Apple stock? And anytime there's a volume, that means there's like one buy and one sell. So there's got to be two sides to every transaction to create a transaction. And so, some people say, oh, look, there's a lot of buys, there's a lot of sells. That's not actually true. There's a lot of both. There has to be both, or else the transaction didn't take place.
Mm-hmm.
But if, you know, for example, the price spikes up and you see a lot of volume, that means like buyers are basically rushing in to buy more and more and more. And then sellers are getting convinced to sell based on these new higher prices. And that's what the volume is saying. And so this whole article is saying, hey, at, you know, Trump made this tweet around, I'm like trying to look at the chart here, just after 7 a.m., but at
Mm-hmm.
like 6:45 a.m., there's a spike in the volume that didn't really have any explanation for it. And the kind of obvious, very suspicious conclusion that you draw from that is who made those trades and what did they know that we didn't know 15 minutes beforehand? And it
Mm-hmm.
doesn't take a massive logical leap to paint a relatively nefarious picture in your head, which is, hey, what if some people in the room where it happens knew what was about to be tweeted in 15
Mm-hmm.
minutes and they went into their trading platform and said, hey, I'm going to go make a trade, like I'm going to go buy, so what happened is the S&P 500 shot up
Mm-hmm.
and oil prices shot down because Trump posted something, positive about the outcome of the war or whatever. And
Right.
so if you knew that ahead of time, you could make trades on that ahead of time
Right.
and make a bunch of money. And that's called insider trading because that is something that's, material and non-public.
Mm-hmm.
And when I worked for a publicly traded company, they would hammer that into our heads. If you have material, non-material means significant. It's not like, oh, the CEO had Burger King for lunch today. I'm going to go. I think that's good for the company. Like that's not
Mhm.
material because like someone there's an argument it could be public that they saw him
Mhm.
if he was eating it in public or whatever. Um, but if the CEO pulls you aside and privately says, "Hey, tomorrow morning I'm making an announcement that um, we're going out of business because we're about to go bankrupt and no one knows," that's very material and
Right.
apparently is very non-public. And so if
Mhm.
I then went to my stock website and said, okay, I'm going to sell all my stock and short the stock and buy a lot of puts and do whatever I can to make money off of this news, and then it happens and I profit, that's insider trading.
Right.
That's illegal. And the
Mhm.
reason it's illegal is because it hurts those people who are trading honestly. If I'm interested in that company and that example I just gave you, and I might buy it. I think they've got future prospects. Oh, someone's selling. I'll go buy their shares. Great. And then that news hits 10 minutes later. Like, oh, I kind of just got conned into buying these like less valuable shares now because that guy knew something I didn't. That's not fair. And when there's that unfairness, it creates distrust in the market, and that can erode the foundations on which we all enjoy this like very mature economic system we have where banks and stock markets and things like that all work.
Yeah.
And so, some people might think, oh, insider trading's somewhat of a victimless crime. It all just gets lost in the wash, which I guess to some degree is true. But if you're the person who made that trade, you're like, oh, I shouldn't have paid $80 a share for this. I should have paid 60, and now I'm out the money or whatever it is, because I didn't have the information.
Mhm.
So, but what do we know? We know only that there's like a spike 15 minutes before this announcement, and sometimes spikes just happen. The article kind of says this is like very early morning hours where there's very little news happening, and so spikes are very unusual in this case. But still, it even says sometimes like algorithms can catch wind of a barometric pressure change in New York, which is public information, and decide that's going to, correlate with bad things, and the algorithms go crazy, and there's a little spike for no reason. Is it that? Is it not? And then, they asked the SEC, and they said, "Hey, governing body that oversees this stuff, why are people trading right before Trump tweets? It looks very suspicious. What is this?" And the SEC said, "No comment."
Okay,
And
can I ask a dumb one in the middle
oh
of
my
this?
gosh, can you ever? Even though we're not there yet, you're kind of
I
out of
wanna
order here.
sorry. Um, okay, I know that I saw some articles that were saying who exactly was profiting off of this. Is it just that we can see that there's a spike, or can we see who's traded? Is that public at all?
To my knowledge, you can't just look up who's making trades. I don't think that's
Okay.
publicly disclosed. I think certain people's trades are publicly disclosed. For example, you can go, Google Elon Musk Tesla trades, and
Mhm.
they are required. Significant insiders. There's reporting requirements by law that says Elon Musk has to announce his trades, but I don't think he even needs to in advance. I'm not fully sure. Don't quote me on that.
Okay.
They need to be made public so you know what they're doing. But if there's just if just a random Joe Blow with a Robinhood account goes and trades, I don't think you can like go look up his home
Gotcha.
address and shake him down and be like, "Why did you buy it?
Okay.
6:45 a.m."
Right, right,
Um,
right. Okay,
and
gotcha. All
so,
right.
I think the SEC can do, go subpoena Robinhood and say, "Yo, why did all these trades come in? And we're
Mhm.
investigating an insider trading suspicion." And
Mhm.
maybe that's what's going on. Decline to comment. Who knows what that means? Like maybe there's an
Mhm.
ongoing investigation, or maybe the bosses at the SEC says, don't look into that. You have to kind of ask
Mm.
yourself, is this, we know the Trump tweet happened. So then you have to ask yourself, is the administration or the people around him, is that a group of people who have been um, very strictly driven by integrity as far as we know? And I think
Mhm.
your answer to that question probably very strictly depends on the news that you consume. And some people
Right.
will say yes, and some people will say no.
Mhm.
For me, I go back to things like this is like early on 2016, first presidential run before Trump ran. It was just status quo for every single presidential nominee to release their tax returns to say,
Mhm.
hey, here's the money that I am, you know, beholden to. Here's how much
Mhm.
I make. Here's who's paying me. It seems like the most easy, transparent move in the world for a presidential nominee to say, this is who owns me or whatever, or at least insofar as a tax return can show that. And Trump didn't. He's like, I'm not doing that. And at the time, he's like, oh, well, because I'm under audit and I can't do it because I'm under audit. And the IRS is like, you can do whatever you want. The audit didn't have an NDA associated with it.
Mhm.
But now we're here, whatever that is, 10 years later, and still he hasn't released. In fact, he's sued people several times who have attempted to release his tax returns or leaked parts of it or whatever. And so, it doesn't strike me as the kind of financial behavior that screams integrity or transparency.
Right.
And so is that sort of thing leaking down to the SEC and how they investigate these things? I don't know. We don't know. And so the unfortunate part is, all we know is there's a spike and we don't know why it was currently. I hope it gets sorted out because I hope we don't have trust eroded in the market. But the good news, I think, for listeners of the show is you can actually sleep very easy if you are not a trader. These are like pre-market moves and, what they called futures, which is basically betting if the market or oil price is going to go up or down. That's like very sophisticated gamblers, essentially, who are making those moves. And while it erodes general trust in the market, for an individual investor, something like this has virtually no impact. I slept through this entire thing. My price before, my price after, don't care because I wasn't trading on that in that window, and I never would because I'm buying for years and decades, not minutes before the open of the market, and all that stuff kind of comes out in the wash. I'm not saying it's not important, it is, but the price adjusts, and the people who got burned were the people who were buying that second. For sure, if you're like buying an ETF in a specific window and there's insiders operating in that window, it could exactly hurt you. But if you're like periodically investing monthly over time and holding for years, this stuff doesn't really directly matter to you other than, like I said, erosion of trust in the system. And so that's your specific takeaway, which is kind of always what I say, which is don't really worry about these macroeconomic headlines. Worry about what you worry about, which is, can you get a raise at work? Can you return that food processor and get $30 back and go buy half a share?
The food processor.
Oh, she says, well, this is much smaller than I realized. I kind of bought it very impulse, and then I'd have to make it the sauce on like 4 different segments. So maybe I just need a bigger food processor.
You need a bigger, spend more.
Exactly. And they range, there's like a $30 version, then there's like a $200 version. So I'm like, do I need a $200 food processor that I'm going to use once every 3 years to make salsa? The answer is maybe. Well, stay tuned for the next episode. You'll find out.
I'm on the edge of my seat.
Yeah. But, it's an interesting news story. And for, I don't have a strong opinion on what this is. I don't know. I think, in fact, if you look at the rest of this chart, there's like a few other spikes throughout the day that look kind of similar that don't, I don't know, maybe Trump tweeted something then. I haven't looked at every single hour by hour, Trump tweet versus volume chart.
And he's not even on Twitter. He's on Truth Social, which I'll never get on. So
exactly.
Those have to be forwarded to me on like another social media platform, and the algorithm knows better.
You just see them on CNBC when someone screenshots them. But for sure, like you're not, Jen, but for sure traders are, right? Because if traders want to know within seconds what Trump tweeted because that's going to move markets, then they're going to be on Truth Social, right? So,
well, I'm also not a day trader, so good for me.
Good, very good for you. And the good news is, in fact, as we're recording this, the market's up like 3% the last 2 days. I know that by the time it airs, there will be a different market situation,
right?
But despite all the bad market stuff happening lately, we've had 2 really good days, and great, because I'm going to sell a little bit every year for the next 40 years and let the market continue to compound, and I don't need to worry about this day-to-day stuff.
Nice. Y'all be like Jeremy. He slept through. He wasn't up for that 5:45 a.m. Trump tweet.
I was up for the 5:42 a.m. tie crying, though, which really hurt my awakeness futures.
You didn't immediately check the stock market?
I was worried about the diaper market and the screaming in my ear.
The Huggies market.
Yeah, exactly. That market's a booming at the Schneider-Jones household.
No. We don't need that visual. Let's move on to money. Can I ask a dumb one?
All right. You're asking smart questions to a dumb guy. What do we got
Yeah, that
today?
was what I asked was a fake dumb one. This is a real dumb question. No, I'm just
This is a
kidding.
real dumb one.
This is a question from a real listener. Kay from, I hope I'm saying this right, Menominee Falls, Wisconsin, which is such a fun name. Like,
Yeah.
let's go. Menominee. What's that
Menominee?
song? Menomina. What's that? You know, it's not, is that a Sesame
Phenomena.
Street
Yeah.
song?
I'm pretty sure that's like Sesame Street. Yeah. Or the
Menominee. Do,
Puppets
do,
is,
do, do, do. Falls. Do, 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 do.
no, the Muppets. That's not Sesame Street.
The
That's Muppets.
that's not the
Yeah.
same thing? Oh, that's a different. Yeah, Muppets is
No,
different.
isn't like Miss Piggy and like Oscar the Grouch, aren't they in different universes?
That's different. You're right. You're right.
I think so,
For some
right?
reason, I conflated the two.
Now I'm questioning my whole Sesame Street.
Yeah, because who
Are
are the
we like
Muppets? Who's a Muppet?
so like Kermit the Frog, Miss Piggy,
Okay, yeah,
Beaker,
Beaker and all of them.
and then
Monster.
Sesame Street's like
Who's the
Big
drummer?
Bird, Bert Ernie. I think
Yes.
those are
Okay.
different. I don't think
These are
they know
different
each other.
worlds. These are different
It's like
worlds. You're
a
right.
Marvel DC thing. It's like
Yeah.
Superman and
Although I feel like there's some. Is there? No, let me not even get into that because I'll get in trouble with the comic book nerds.
well, now you have to say it.
Well, I was gonna say, isn't there like some crossover now with like universes?
I do know this. You and I are the perfect two people to have this conversation because I don't think we could even possibly name 4 superheroes. We're gonna get through
Yeah,
Superman.
sure. Yeah, Batman,
Okay,
Iron
give me
Man,
3 more. Wait, what'd you say?
Catwoman,
Okay,
Storm. I know a lot of superheroes.
okay, and now give me
Yeah.
the universes of those.
Okay,
Of
I
those
know
5.
Superman is. Oh shit! Now we. Nope. Iron Man is Marvel for sure. Robert Downey Jr. is Marvel down.
Okay, right.
Black
Apologies.
Panther,
We need to
Marvel.
we need to send a
down.
formal apology
Rest
to
in
all
peace,
comic
Chadwick
book fans. What'd you say?
Okay, that's all I know. I said Black Panther is Marvel. Rest in peace,
Okay.
Chadwick Boseman.
Great.
Okay, so let's ask this question from Kay from Menominee Falls. Okay, she says, after taking Jeremy's course, I've started investing in BFORX, Target Retirement Fund. Since October, the market has fluctuated, of course, and I currently only am about $500 up from where I started. That's over 3 months. I understand that the market does go up and down, but has historically grown at a rate of about 10% per year. Once you become FIRE, should you have a year worth of expenses saved up in cash to live off, then replenish it from the 1 year worth of dividends from your target date funds investment, because it is clearly unreliable to get that 4% return every month. These are kind of like 2 separate thoughts, but maybe she wants you to comment on the first and answer the second.
Totally. So, I mean, first of all, Kay, amazing work. Congratulations on getting started. Investing early and often in a target date index fund like VFORX is, essentially optimal investing. You're doing incredible. The hard part now, you've essentially solved investing. Like, day trading futures based on Trump truths is not how you get rich. That's how to stay broke for the rest of your life. Doing what you're doing, investing early and often and acquiring shares and letting those compound over time, that's how you get rich. So you've solved investing, but the hard part is sticking with it, right? The hard part is being consistent, letting time do its work. And you're 3 months in. 3 months in is like, baby. That's like brand new. 3 months in, the chance of the market being up in any 3 month period is like just over 50%. It's almost a coin flip. And the fact that we're, a month into a war and you're still up a little bit is actually like kind of an amazing thing. It could
This
easily be
question
down right now.
was probably from like 4 months ago.
Okay, so yeah. All right, well, never mind, Kay. You're currently
Let me find
down.
out.
Sorry about that. But that goes to my point, which is like early on, this 10%
She
thing
asked
is
us
not
in
reliable.
December. Yep, 4 months.
Okay, great.
Sorry.
Yeah. Well, you're currently down probably. And you're currently down because the market's down a few percent this year so far. But, but that's kind of my point, which is the market rarely returns 10%. It's not like getting a pension payment or a bond payment or interest in the savings account. The market sometimes returns 25% in a year. Sometimes it's negative 16%. Sometimes it's 2%. Sometimes it's 18%. Sometimes it's negative 4%. And when you add up those, compound those over time, you can't just add them up and average them out because you actually have to like multiply them together to figure out where you're at. It basically has a compound annual growth rate of around 10%. But you don't withdraw 10% per year in retirement. That's too risky because you can't count on that 10%. That's why, the rule of thumb is 4% is like a reasonable, safe withdrawal rate. And so let me give you an example. Let's say you retire with $1 million. 4% of that is $40,000. So your safe withdrawal amount is $40,000. And the way that works is you take that $40,000 every year, and you also increase it for inflation so that you don't need to live on less every year. You're kind of maintaining a consistent level of living based on things becoming more expensive. So let's say year number one, you retire with $1 million, you take your $40,000, and the market goes down 5% that year. With the market being down 5% and your $40,000 draw, your $1 million, broad strokes, became $910,000, minus 50% from the market going down, minus 40 from the draw. Now you're down to 910. And so the market's down, you took out your 40. Year two, you take out another $40,000, but let's say year two, the market's up 20%. Now at the end of year two, you're at $1.04 million. So you're kind of above your original million. And so that's kind of, those are two hypothetical first 2 years, market down, market up. And it just shows you're taking out a little enough that the remainder can be a little bit volatile. And so it's not like you're going to see a dividend payment or an interest payment that's reliably 4%. It's just that you're relying on this average 10% growth over long periods of time to continue to be true while you're taking out a small amount to not kind of kill the nest egg. And so, do you take it all in January for 12 months? Do you take it month by month? And the answer to that is it doesn't really matter. You say it's unreliable, but it's not reliable to only be living off the growth. It's reliable to just trust the process and say, hey, even if I have 1 or 2 or 3 down years in a row, I'm still going to stick to the plan, take my 4% of that original amount, adjusted up for inflation, and trust that the market's going to recover. And even if it has 3 bad years, maybe it's going to have 7 good years after that, or whatever it is. The market usually goes up. If there's a bad year, it's usually by itself. 2 bad years in a row is unusual historically. No one knows the future. We could get hit by an asteroid and all this could be moot, but that's kind of what it's all about. And so I say, okay, you're crushing it. You've solved investing. You're doing very well, but you're very, very early. And the longer that you do this, the more comfortable it's going to feel with volatility. You're 3 months in, you're like, I'm only up 500. As of airing of this, you're probably down a little bit. That's okay. Keep sticking to the process. Keep investing early and often. Don't worry about your 3-month return. Don't worry about your 6-month return. Think about what the plan is for the next 40 years, and you will crush it.
Nice. You did a good job of explaining what happens once you retire. I liked that.
Yeah, I think a lot of people just get too worried about, what happens if the market's down. Well,
right.
If the market's down, you don't sell everything and be like, oh, I lost the game. I'm a loser. No. You're still if you retire at 65, you still have maybe 30 years of life on average left, because 65-year-olds usually live past the normal average because you didn't die for the first 65 years of your life. And so, you have 30 years. So you're only taking a little 4% out at 65 and a little 4% out at 66. And whatever's happening those years doesn't really matter that much.
Yeah. No, that made it make a lot of sense. And I feel like we talk about what's happening now so much. And I know we've done the 4% rule and things like that, but that, I don't know, feels like the first time you broke it down quite like that. That was tea.
Okay, good.
Okay.
We're shouting numbers on the microphone again.
Okay. No, but it felt very manageable. I don't know what you did differently.
Okay,
anyway,
okay, good.
Let's move on to Scroll Patrol.
Scroll Patrol.
All right, I've got a video here. I got it from the internet. Ever heard of it? Jeremy has not seen this video. We're going to click on it. We're going to watch it together. And Jeremy's going to give us his very informed thoughts.
All right. I have not seen this video. I'm going to watch it now.
Iran denies Trump's negotiation claims, and stocks don't care. Here's why. Stocks look like they were going to absolutely vomit early this morning after 4 straight weeks of selling off. Then Trump tweets, "We're in negotiation with Iran," and stocks absolutely rip higher today. Now, Iran claims there are no talks. You have to separate politics from markets. Because from a market perspective, it doesn't matter whether talks are actually happening. It matters what this message signals. And the signal is the US is looking to de-escalate. That's why stocks rallied. Good investors separate noise from signal. Hit follow to get smarter financially.
Yeah, so that guy is named Taylor, and I actually know him in real life. Kind of a funny story, which is I met him. He was just some dude at FinCon with no social media account whatsoever. And we were talking about what I was doing. And he's like, "Oh, how do you have so many followers?" And I kind of broke it down for him. And so he started posting, and now he has 300,000 followers on Instagram, maybe even more on TikTok. I don't know.
Okay.
But like you know, I mean, he's obviously doing all the work himself, and he probably talked to a bunch of people at FinCon. But I think if you ask him, he might point to that conversation as like the core moment that he
So basically, what you're saying is you made him who he is.
I made him, and he owes me everything. And
honestly, as we were watching it, I was like, oh my gosh, I'm glad you know him, because I was watching it and I was like, I'm getting to the point where I don't know which videos are AI and which ones aren't still. Like it's getting, and I was like, the way he edited it kind of choppy like that. I was like, oh my gosh, is he AI? Is Jeremy going to roast me in a second?
Oh, damn. That's a scary time. Like, he's literally just a dude walking around with his phone, making these videos. Yeah. And, he's like a Wall Street guy, knows finance, has, pretty thoughtful takes on this stuff. I don't like, he's not like my best friend or anything. I don't like necessarily endorse every single thing he posts. I don't necessarily endorse everything anyone posts. But yeah, he seems like he's a relatively thoughtful guy about all this. And into the review of his little TikTok there, his little reel, I think he's essentially right, which is the market isn't reflecting reality as of now. The market is reacting to predictions to the future. And the little contrast he pointed out was really funny, which is Trump said, "Oh, we're in great talks with Iran," and Iran's like, "No, we're not." And the market's like, "We don't care. If Trump thinks things are going better, then we're betting things are going to go better, and so we're going to like rally." And there's an old saying with the stock market, which is "buy on rumor, sell on news," which means if you hear something's about to happen, it's time to buy. Once it actually does happen, now it's too late, so you sell. And in reality, the reality is buying on rumor is too late. Like we literally just talked about in the last segment, you need to buy before the rumor, right? The rumor is Trump spreading this rumor that talks are happening with Iran, which aren't happening. Buying before the rumor is how you actually make money. And unfortunately, what that leaves us normal non-insiders with is this impossible situation. Is by the time anything hits your eyeballs or your ears, it's too late. The market's already moved. You can't buy in rumor. The rumor is already priced in by the time it's processed by your brain, because there are algorithmic traders trading every thousandth of a second. And so it's all priced in the market whenever a human is aware of it. And so, he's a much more active investor than I am. He's not like a buy and hold index fund guy. He's like a trying to break down the workings of individual trades kind of guy. And I'm not. And so I can gladly say, yeah, everything he said makes perfect sense. I still don't do a single darn thing about it. I do what I tell Kay to do from the last segment, which is, hey, I'm going to keep trudging away. What's the word? Like marching away.
Yeah, trudging.
Trudging away. Okay, maybe that's the word. Trudging away, buying a few shares here, buying a few shares there with my extra money every month, putting it in, not worrying about if it's rumor, not worrying about if it's news, not worrying about what Trump says or what Iran says, because this whole Trump-Iran headline is going to be way in the rearview mirror in 6 months when it's a new scary headline that I'm also going to not care about. I'm buying the companies of the world that are to continue to operate, and there's this amazing machine that pumps the value of the companies of the world directly into my bank account. I gotta accept the volatility. Guys like Taylor who are more active and moving the markets on a day-to-day basis, don't worry about that. That's just going to be part of the trade-off for me. But I'm going to profit handsomely over time because the companies of the world continue to grow. And so, yeah, I give this video an A- because, I think everything he says is technically correct, but I just don't think the takeaway is buy on rumors, sell on news. I think the takeaway is ignore the headlines, ignore the news, ignore the rumors, buy low, buy high, keep buying. That's how you maximize your compound growth.
Nice. K from Menominee 1, Taylor 0.
I feel like sometimes we review these people. I'm like, there's no way on earth they will ever hear this. I think Taylor has like an outside chance he's going to listen to this. So, hey, Taylor, I hope I didn't just offend you by...
I'm glad you're not AI. No shade. It's starting to get closer. It's not you, bro.
Dude, it's a scary time. I mean, I don't know. Maybe he has an AI perfect avatar that can just pump out these videos. I suspect he still is recording
Still
him
a
on
real
his
person.
walks.
I
you
feel
know,
like
but-
they don't have the mouth right quite yet. Have you
Yeah.
seen that video that's going viral right now about the guy who put like a face over him, and he's in India, but he put a white face over him, and they asked him to put fingers in front of his face, and he won't do it.
Oh yeah, he's
It's
like
like a job interview.
doing a sales pitch or some
Yeah.
sort of financial, and and he holds up 3 fingers over here, but he knows that if he goes
Yep.
like this, it messes with the filter. What's
Yep.
scary is like it's super. When I'm sitting there squinting, looking at his face over this like pixely Zoom recording or whatever it is, like I
It
wouldn't
looks
I
real.
wouldn't have questioned it,
Yep. Yep.
until like, as soon as he wouldn't do it. Of course, like okay, well now you're obviously lying because there's no look. I'm doing it right now. See, Not AI,
Right.
everyone.
And also, I
everyone-
feel like if you're a recruiter, they're dealing with crazy amounts of like AI technology
Oh.
and like having to, like recruiters specifically, where you're just pumping out numbers day after day.
Yeah.
Maybe if you're like a company that only does interviews every once in a while, you might not catch it, which is so crazy to think.
Interesting.
I could have been
Yeah.
AI.
I mean, we're small. We don't hire that often, but as a programmer, I usually ask programming questions, and now we're to a point where you can literally just take my programming questions, copy and paste in one fell swoop, put it in literally any AI, and it gives like a really, really good answer. And so,
Yeah.
and maybe that's okay because, it just means like that's not a good way to test someone anymore. And the question is,
Mhm.
okay, if they can do that, then they can do that here at their job too, which is fine. But then what skills do we need to be testing for? And
Right.
it's more like understanding this stuff, and it's kind of like higher level thinking, which is just the world's a changing, Jen.
Oh gosh, here we are. All right, we have
Here we
one
are.
final segment. Let's get into it.
Money.
Jeremy had time today. We're in the comment section. I
had
am. Where am
time.
I? I'm on
People
Instagram.
roasting me.
Yeah.
Oh,
No, not quite
old
a roast.
The old Graham.
Inquiring. Yeah, I'm back on Instagram.
Most of these comments are exceedingly nice,
Yeah, exactly.
and
I went
they're almost all
astray.
accurate too.
Yeah. So I'm curious about this one. This is a carousel on Instagram titled "How I Retired at 36." Includes several slides that show you how your net worth increased over the years. Do you want to explain what we're seeing before we get into the comment section?
Yeah, basically, I made this little swipey carousel thing that kind of walked through my, every few years update of my net worth and kind of what I'm doing in life. And so, back in 2010, for example, it said my net worth was $41,000. I was, what does it say, 30 years old at that time, and paying myself $36,000 a year, driving a 1999 Ford Explorer. And
Shout
then,
out.
fast forward 3 years, now my net worth is up to $110,000. Still driving a 99 Ford Explorer, and it kind of just goes to show like, hey, this is my path. This is how I got there. Some of it was selling a company, some of it was investing, some of it was Roth IRAs, whatever. And then this very thoughtful, reasonable commenter said,
How did your net worth grow from $41,000 to $110,000 in 3 years? A $69,000 increase from 30 to 33, when you only put $15,000 per year total in index funds. Did the market do extremely well in those years?
that's a perfectly reasonable question. And so, and I went back and fact checked myself to provide this answer. Number one, I agree. It doesn't make perfect sense with those numbers. If you go, and part of that is because, first of all, this was like 16 years ago, and I am going based on the record keeping I've done along the way. And also that record keeping isn't like a perfect, like day-to-day tracking. I think the $110,000 was kind of like my maximum net worth right before I sold my company, where the net worth shot up by $2 million. And so it's a little bit hard to back into, okay, if I, on January 1st, 2010 to January 1st, 2013, and I also think these are like end of year numbers. And so, the numbers are a little bit squishy is the first answer. The second answer is the market did do extremely well, like you suggested. So if I go and I went back and put these numbers into an S&P 500 calculator from 2011 to 2014 was kind of the end of year, the end of year of those numbers. And the market was up 15.4% annualized over that time. If you take that plus my $41,000 plus my $5,000 per year over that time, it comes out to about $87,000. And so, most of that was just the growth of the market during those 3 years. And the bigger the number gets, the more it gets. So, we're still, 87,000, we're still off by $23,000. Also during that time, part of that was just, it wasn't exactly 3 years, it was probably 3.5 years or whatever. Part of that was, I think I took out some cash from my company. The transaction when I sold my company was like a no cash, no debt transaction. So we paid off all our debts and drained the bank account. I think I might have gotten, that might be all of it right there. Actually, it might be 20,000 from that or something. I also started a side hustle during that period where I started another little website that was actually cash flow positive. And so I might have had 10 grand from that that ended up in my investment accounts. And then there's some small stuff too. Like I sold a car in there.
You sold a food processor.
I returned a food processor to Amazon for $30. Add that. And then I sold a car for $6,000 and I bought a new car for $3,000. I literally downgraded my car and had a net cash influx of $3,000. And so, the answer is it's all of these things. It's like a little bit messier than, I think all of our lives are a little messier than I put $500 a month into an S&P 500 index fund and spend and earn no other money anywhere else in life. I think everyone's situation is a little bit more complex than that. But for what it's worth, like these numbers are from my actual spreadsheet where I track my net worth every year and I look at them at the end of the year. And I think those are the answers. And so, you're very right to say, hey, that doesn't quite add up. And you're right, it doesn't quite add up. But this isn't a track record of how did the market do over these 3 years. It's a track record of how did Jeremy do. And Jeremy had some other stuff going on, as we all do.
Yeah, you need more haters because these people are being too nice to you.
And they're also like usually right too, which is the most frustrating part, Yeah. And they're usually like a lot of these comments are like, okay, yeah, what about this? And I'm like, yeah, it doesn't say that in there because it's Instagram and it's like, 1,000 pixels by 1,000 pixels. And I can only, I can't put my entire...
but you have like 3-paragraph comments. What's up, Jeremy? Maybe your captions need to be better.
Oh, the captions. Well, people don't read the captions. I guarantee people don't read the captions. And if I put them in the caption, they still would comment that. No, this person was super nice, and it's a perfectly nice comment.
Yeah, you need more haters also because that will mean that you're doing better because that's how you know.
Yeah, that's true.
You need like Michael Jordan. He would create haters.
He would create haters? What does that mean?
Yeah, he wouldn't even have people really against him, and he would just be like, I've just made it up in my head. Watch the documentary.
I thought he would go push a little kid into the mud or something.
No.
And be like,
I took that personally. Have you not seen that Michael Jordan meme?
I definitely saw the took that personally quote. I love that. All right, I need to get more of a Jordan mentality.
Yeah, you need more haters so we can get better comments. Well, thank you, anonymous commenter, for your thoughtful comment. And we actually have made it to the end of the episode, believe it or not.
Yeah, thank you all for joining. It's been a blast. And if you want to be like Kay and build a lot of wealth, you got to do what she's doing. From Menominee, we think it might be pronounced.
Roger saying it wrong the whole time.
I'm sure it's wrong. I'm from the Midwest too. I feel like we have all these like Native American names like infiltrated in our. But I think that's like I'm from Michigan and she's from Wisconsin. You only know how like your state crazy names are pronounced,
right?
Like Kalamazoo or.
How many different ways can you say Menominee? Menominee?
Well, you started saying Menominee and I went Menominee, and so there's at least two.
This is recorded medium. We'll find out.
Yeah. Let's replay that. Let's see who said it each way first. Put it right in here, Sahil.
Menominee Falls, Wisconsin, which is such a fun name.
Menominee?
What's that song? Oh, we're doing extra work.
I'm bringing receipts to the podcast from 20 minutes ago.
Fine. Okay.
All right.
Give us the rules.
Don't listen for who is in what Marvel universe, and don't listen for who's a Muppet and who's a Sesame Street, because we really have no idea. We are not expert in that. But I do know that if you want to build wealth, you got to follow the 2 rules of Personal Finance Club. Rule number 1, live below your means. And rule number 2, invest early and often. See you next week.
The Personal Finance Club show is produced by Jeremy Schneider and Jen Mundia. Music by Esabalu and Homie. Send your questions to podcast@personalfinanceclub.com. The Personal Finance Club show is co-hosted by Jeremy Schneider, who is a co-owner of Nectarine, an SEC-registered investment advisor. The views expressed on this show are those of the hosts and guests and do not necessarily reflect the views of Nectarine. Please refer to hellonectarine.com for all relevant disclosures. This podcast is for informational and educational purposes only and should not be construed as personalized investment advice or a solicitation to buy or sell any security. Listeners should consult their own financial, legal, or tax professionals for advice specific to their situation.